start that, and we're gonna go live. What's up, CJ from North Las Vegas? We should get Zach out to meet you. Zach's from Vegas, Zach Forrest. CrossFit Kerosene, Newbury Park, California. A lot of Californias. That's nice. Where's Newbury Park? Is that Orange? No, San Diego area? Newbury Park. Oh, Thousand Oaks. Carlos, where are you? You're in San Diego?
No, actually, today I'm actually out of the Glendale office.
Okay.
Glendale, California. Beautiful day.
It is. It is. Okay, a couple more things and we're gonna get going. And while I'm doing this, why don't you give everyone a background here about who you are and what you kind of do?
Sure. Carlos with Bank of Southern California. I've been a banker for over 22 years. Our bank is headquartered, as you had mentioned, out of San Diego. We have branches in San Diego, Orange County, Coachella Valley, and the AV as well, Lancaster, Palmdale area. And we are primarily, a commercial bank, business bank. We focus on lending. And with everything that's been going on, this has been, for us, a little bit of an opportunity to really kind of get our hands around clients and prospects that are looking to understand what the lending guidelines will be. So it's still very fluid, but we're working hard every day to kind of, demystify some of the things that are out there. And I've, had known Brian back at another bank about 10 years or so ago, and we just reconnected, and he asked me to kind of look into providing some information.
Good. Okay. Yeah. That's how we got connected with Brian. A lot of guys don't know Brian because he's kind of the unseen face behind it all. Brian's one of the partners here at Push Press. All right, cool. So what we're talking about today is this whole SBA. So what basically Push Press represents a lot of small businesses. They're gyms, boutique fitness and gyms. And a lot of them are kind of struggling with what's going on right now. And what we're trying to do is help them navigate and figure out all the SBA lending and these Emergency CARES Act and everything processes that are coming online and available. And that's why I had you on today, just to kind of take some of the chaos out of this. There's a lot of information floating around, some good, some bad. And it's a moving target. So I figured we'd bring in a lender who knows what they're talking about and get some of this information kind of out concrete for everyone to see in one shot. Okay. So first things first, there's been these EIDL loans for a while, the emergency impact disaster loans. Yeah. And how does that differ from what just came out with the CARES Act?
So those are more general loans, right? So those, you can use them not just necessarily for payroll or rent. You can use them for just about anything that your business will need. Versus, the payment protection, plan, or PPP is what we're calling it. That one is very specific about trying to keep employees on the payroll. There are some provisions, and as you mentioned, it's a moving target, but there are some provisions that will allow you to use some of the funds if there's a loan that's obviously approved and dispersed, that you'll be able to have some flexibility. But the other one could be used for just about anything, and in that particular, the IDL loan doesn't have any a provision that you can get a grant afterwards. And we can talk about that in a little bit. And I don't know if I'm allowed to share the screen. I had created something that I wanted to go through, but you drive it however you need to. And I had some things that I just wanted to kind of bullet points that I had done that we were talking over the weekend, as a matter of fact.
Yeah, let's do that. Let's start there. Why don't you go ahead and share your screen? While you're getting that set up, I'm going to remind everybody at the end, we'll do some Q&A. So if there's anything that is not brought up with Carlos here, make sure you write down your question. We're going to use the Q&A panel here in the chat, in the Zoom. We're write down your question in the Q&A and we can answer that. But for now, Carlos, why don't you go ahead and share your screen?
Yeah, I'm clicking. Could you allow me to
Oh, do I need to allow
share
it?
It's on the settings.
Maybe I need to make you a host.
I don't think, there it
Give
is.
there you go.
Okay. So one of the things I just want to really point out is, look, the bill was just signed, the CARE Act was just signed on Friday. Over the weekend, everyone's working really hard to kind of like, what does it mean? Where's the provision? There are some guidelines that are coming out at the end of the week. I'm hearing as early as today or tomorrow, but until I see it, I'll believe it. But I just want to, mention this, that no one can right now, no one can comprehensively speak for all the details, right? That all the lenders need to know. So just be very careful when it comes to what you're reading out there. I think SBA.org it's a good organization out there. So just be very cautious with what you're reading, because the information is really fluid. So I'm not going to read through the entire thing here, but I'm just going to go over the highlights of it, right? So, the Paycheck Protection Program, right? The PPP, right? For the coronavirus. It's part of the CARES Act that was just signed. Here are the highlights: 349, but $350 million are just specifically allocated to the PPP, which is a lot of money if you think about it. Here's some things that you want to know, right? Program highlights.
Real quick, I don't think you're sharing your screen. If you wanted,
sorry,
or at least on us. There we go.
Which one?
Yep, you're good.
Is it there? Are you able to see program highlights?
Yes.
Okay, very good. Sorry, guys. Again, you need to demonstrate that your business was economically affected by the COVID-19. There is no cost to apply. Again, it's free. The funding is meant to help retain workers. This is as you were asking, the difference, right? The sole purpose of this is really, when you're going through the application process of this, is to maintain workers, maintain payroll, right? Cover the rent, because if you can't keep, your rent or mortgage or utilities, then you can't keep your employees anyway. So that's a little bit of a package there. I'll talk about this a little bit more. The way the loan's going to cover expenses dating back from February 15th, right? So they're going to date back to, last month, all the way through June 30th, 2020. Here's the part that's attractive to a lot of folks, right? The part of the loan can be forgiven, essentially turn into a taxable grant.
Non-taxable.
Non-taxable grant. It's the interest rate. It's 4% according to what we've read. We're gonna have an extended deferment payment for that portion that does not become, if there's a portion, and I think there will be, that doesn't become a non-taxable grant. There's going to be a deferment payment of 6 to 12 months. Well, what does that mean? You get the loan, you use it, appropriately how it's intended to be. You got to keep good documentation behind that, and then they're going to defer payments for 6 to 12 months until hopefully everything comes back to normal and businesses are thriving again, right? There is no prepayment penalty, which is a cool thing too, right? If you get it, and then you're fine, you're back to normal. You don't want to be carrying any debt, which obviously some businesses don't want to do, or lessen the debt. You can pay the loan back. I'm going to go through again, hopefully answer some of those things that might come later as a Q&A. Really important. Your business had to be in operation as of February 15th, 2020. The program is more extensive than the SBA disaster loan, right? It's people that qualify, small businesses, sole props, independent contractors. Haven't had that answered yet in regards of what happens to the business that is trying to maintain 1099 employees that they're paying through, right? So I'm still working on getting more guidelines behind that. Self-employed individuals also qualify. I'll script down to a couple of other things that I just wanted to highlight, right? Here's something that I thought it was really interesting too, right? Typically on a normal loan, right, even through SBA, there's no collateral required. So you don't have to see this loan. You don't have to secure it with equipment or a building or anything, right? Typically SBA loans, will require you to do that. I think that's really interesting. Again, The portion about the, that can be forgiven, through the loan, right? It differs from just the SBA disaster loan. Here's something that you got to really think about, that when you're applying through the loan, you must acknowledge that it is to retain workers, for payroll, healthcare and insurance premiums, to pay your mortgage, lease payments, utilities, which is, I'm still trying to find a definition of utilities, right? I mean, is it Wi-Fi? Is it water, power, and the normal stuff that, that you're used to, right? And I even noticed that, that you can actually say, hey, if you have other, credit card debt or what have you, again, to keep that business going and to retain your employees. So just keep that in mind. But here's something really important, right? That, that there's not all of it, it's going to be qualified to be forgiven, right? I think the portion of the portion that's going to be qualified, it's really the payroll. But again, guys, really flow is, banks are trying to, kind of, understand exactly how that's going to work. How much funding can a business receive, right? I mean, it's, the SBA will ask you to provide documentation on your business payroll. They're trying to do a comparison from last year. What were your average expenses, as of February 15, 2019, through the end of June 30th, 2019. So, you got to go back and you got to look at your expenses. What were those, overhead expenses, right, of payroll, rent, mortgage, and utilities. And then they're going to do 2.5 times that average cost. Now, look, this is something that we, as of today, tomorrow, I'm talking to the underwriters. I still need to figure that out. I know that the payroll is there. I have read that the mortgage and rent will be there, and that the utility payments will be a part of the formula to figure this out. And to give you an example, right? I mean, this is just a basic example. If your payroll was 10K, your mortgage was 5K, your utility was 1,000, right? That's a $16,000, average total monthly cost times 2.5. That gives you the opportunity to apply for a $40,000 loan or so on, right? The other example is the same thing. It's just higher numbers. So just kind of keep that in. I'm still trying to really, I see it in the regulation. I need to get the guideline that we're going to be able to do the mortgage and the utilities. It looks like it's going to be an option, but I want to see it in writing from them. But that's what it appears to be right now.
Let me just jump in there real quick because it's been widely reported that the payroll, the mortgage, and the utility are going to be all part of the calculation, and it is written in the bill, like it is very clearly written in the bill as such. My interpretation of what you're saying here is, as the lender, you want to see this in fine print on paper in front of you on a loan that you can actually sign. Yeah. Because I feel like a lot of aspects of this loan are just so different than what is the norm. So I have a feeling there's a little bit of hesitancy you want to see it before you're promoting it. Is that what it is?
That's exactly right. Thank you for clarifying that a little bit better, right? I mean, it's there, it's in the bill, but there's so many provisions and there's so many guidelines, right? And again, right, the bill's written, to try to support businesses, but at the end of the day, once it gets, some of this stuff may get lost in translation by the time it gets to the actual banks, because at the end of the day, we're going to have to follow, even though the loan is 100% guaranteed through the SBA, we need to follow the guidelines that the SBA provides to us. Otherwise, we can't do the loan at the end, because they'll be the overriding, approval in order to follow that framework.
Cool. So as of right now, everyone who's listening and tuning in either on Facebook or on Zoom, if there was any aspect here that you've just learned or figured out, why don't you type that in chat, because maybe someone else can learn or figure that out, or something you thought was cool. And if something that Carlos has just gone over that is raising a question for you or a flag, type that up and put it in the Q&A so we can make sure we can get that later. All right, Carlos, go ahead and continue.
Great. Thank you so much. Again, how is the loan size determined, right? Depending on your business situation, the loan size will be calculated in different ways. The maximum loan is $10 million, right? You needed to be in business on February 15th. We already went through that. Here's another thing that I think a lot of people are asking, right? That portion of the loan that can be forgiven, right? In the 8 weeks following your loan signing date. So think about that too, right? It's not necessarily, but it's the 8 weeks that, let's say, we get guidelines today, you apply tomorrow, by Wednesday you got the check. Doesn't happen that way, but if you did that, right, you got to think of that day. That's when the meter starts running, right? one of the things that they want to do is they want to ensure that they don't, loans are not given out there and then, the money is not being used to retain, employees. So all expenses related to the following can be forgiven: payroll, salary, wages, vacation, parental, medical, sick leave, as you can read there, mortgage interest, as long as the mortgage was signed, before February 15th. So rent, as long as the lease, again, February 15th is the key date, and utilities, right? As long as the services began, you can't all of a sudden say, hey, I'm going to jump up to like the premium, whatever, right? Or I'm going to go get another loan. It's got to be as of February 15th for those things to be considered.
Hey,
and you got to think, and you got one quick question. One thought. You got to think that you're going to get the loan, right? You're going to apply for the loan, you get the loan, and then you're going to have to go through a step of actually applying that to, for that portion of the loan to be forgiven. So that's going to be another step that's going to have to come back later that you're going to have to deal with your banker. Go ahead.
I had a question. I had a personal question regarding that. So in the loan qualification looks back at your average payroll from before. In terms of qualifying for what gets written off, what if you get, because all these say, as of February 15th, 2020, except payroll. What if someone was due to get a raise this month?
Yeah, no, you know what, and I think I've seen something, and I don't think I put it in my bullet points. I think that there is a provision. I think it's something like it can't be more than 25% or something like that, right? I mean,
Okay.
it can't. I think there's going to be a range, and that's part of that guideline that we're looking to get, right? But I think that, for example, all of a sudden you can't give someone a raise. Yeah, I'm going to give you an extra $50,000. It just that won't work. But I believe that they put something in there, from what I've seen, that there's going to be some more direction behind that.
Gotcha.
Okay, I'm almost done here, guys. This is the tail end of it, right? When submitting your application for loan forgiveness, this is the thing that I just want to, emphasize and underscore, for folks listening and watching. You're gonna have to be really good about maintaining, documentation behind this if you want, that loan, at least a part of that loan, to be forgiven, right? So, they're gonna ask for, documentation verifying, the number of full-time, employees on the payroll. The payroll tax filings reported to the IRS is how you're going to prove that. Your state income payroll and employment insurance filings, that's going to be something, another packet that when you get to that step that you're going to have to submit to your bank and say, okay, I'm ready to, apply for, for that grant, non-exempt, forgiving of a portion of the loan. But you're going to have to be really good, right? I mean, you got to keep your utility and your mortgage payments, your cancel checks, your payment of receipts, your account statements. It's really important to do good diligence on keeping that information, at hand, because it's just money that you just got to put it together. Your bank's going to help you put it through, and then again, there's going to be a review period that everything's submitted, and then hopefully, right, if you did everything right, and everything's documented appropriately, then you can get that portion forgiven. Quick note, once you go through that step here, lenders have up to, they got up to 60 days to say, yeah, we got all the documentation, we see everything's in order, we're going to forgive that portion of the loan.
And for the sake of the audience, the lender would be like your company or
like
the
my
bank,
company, right? So let's say you get a loan with me, you get approved, then after, right, you through those 8 weeks, you come back to me, you kept all that documentation that I just mentioned. You say, Carlos, I'm ready to get that done, and then you submit all those receipts, all IRS copies of everything for payroll, and then I review it, I submit it to underwriting, and then obviously if everything's okay, that portion is forgiven.
Hey, quick question on that. I'm just curious. What is your incentive for approving or turning down loan forgiveness submissions?
Great question too, right? Because
why wouldn't you just approve them all or deny them all?
I believe from what I can see, right, because the loan it's free to apply. I mean, it's not like a typical loan, right? If you get a commercial loan or any kind of a loan, there's going to be like some kind of a percentage of the loan that bankers are going to get. As far as I can tell, I don't think we really need, we really have an incentive one way or the other than that we want to keep our SBA preferred status, accordingly. So if we submit something and they do an audit, right, and we're not doing it right, or we don't have the right documentation, right, as a bank, then, we can get in trouble, and maybe next time, there's, an opportunity to help, under the SBA program, we're not allowed to. So that would be the status, just, doing the right thing, just as a bank.
Okay.
this is something that I just wanted to mention that, here. The amount that can be forgiven will be reduced in proportion to any reduction of employees retained if any wages were reduced by more than 25%. So if you have employees and you're still having a hard time, I mean, it's not like business as usual right now, and you start reducing staff, I think you're going to be okay as long as you don't reduce, the wages by more than 25%. So if I'm making $100, I can only, maybe deduct or reduce the wages by 25 bucks, right? Just to keep it simple. If you rehire employees that were previously laid off at the beginning of the period or restoring a decrease in wages or salary that were made at the beginning of the period, you will not be penalized. So if you already let some folks go because you just, you couldn't keep them, but you were able to rehire them by June 30th, you're going to be okay, right? You can still apply for that, that loan forgiveness portion.
Got it.
And again, the last thing I would say on this, and we'll take some questions however you want to go from here, but the last thing I want to say, like, look, this is a massive bill of 880 pages. So this is kind of just a quick highlights of summary and things. I will have more information as the week progresses, as early as tomorrow or the next day, as things is a moving target. It's a great analogy. That's all I have on those highlights. I don't know if you have any questions you want to ask me or anything.
We will definitely start digging into some questions. One thing I want to mention to everyone watching is this is only going over the SBA loan program, the payroll protection plan.
Yep.
And we will talk about the EIDL type loans as well. But this does not include, there are some tax credits and there are some other things in this bill that will impact you as a gym. We're only talking about the loan program today. Okay. So I got a couple questions here that I think are really relevant. If I've started my business, let's say I started the business February 21st through whatever bad luck that I have, right?
Of this year.
Of this year.
Yep.
Do I have any type of ability to participate in this CARES Act PPP loan?
Not the way I'm seeing it right now. The only other thing would be maybe to really connect with your SBA, local SBA chamber, and they may have a different path that they could come back and say, hey, look, and look, it's part of it is this, right? I mean, obviously there's a lot of blood, sweat, and tears to launch a business and get it going, and that doesn't I don't dismiss that easily, but the reality is that if the business hasn't started that long, I mean, they're looking at it from a different perspective, right? They're trying to maintain some of those businesses that have maybe a long-standing history behind that. So
okay.
my best suggestion would be just to contact your local SBA and see if they have some kind of a startup or some kind of a help for for those type of business. But I don't see it because everything that I'm seeing is February 15th.
Okay. And in that case, could they get an EIDL loan, or are they going to have the same problems because they're so new of a business, they're not going to qualify for much?
I would give that a try because obviously the business was there, and maybe it all depends on how much capital the business would need to keep it going. But I would definitely try the EIDL portion of it as well.
Okay, cool. Now, there's a lot of people who have already applied for an EIDL loan. And I see a question that's floating around the internet a lot is, oh crap, I applied for an EIDL. Do I not qualify for this PPP anymore, or how does that work?
So the best answer to that, it's okay. If you apply for an EIDL loan and you got it, you can roll that portion of the loan into the PPP program as well. And I think that's a really cool thing to do, right? I mean, now I don't quite, what I need to understand a little bit more is, hey, like on that example, hey, you're going to qualify for 40,000. Let's say you got 10,000. Does that mean that the new loan is going to be 30 because that should have been the average, or is it going to be, 50, right? The 30 plus the 10, or is it just going to be 50, right? Because you qualify for 40. So, but as far as I can tell, and as far as I'm reading, you're able to. It's okay if you apply and you got it. You're going to be able to roll into this one new loan.
Yeah, that's what I was reading too. Like you get the sum of your payroll times 2.5, as long as that's less than 10 million, which it is for every gym owner, plus any EIDL loan balance you have outstanding. So you get to add that in.
Correct.
Right.
So if you saw that, that's fantastic.
Cool. Okay. So another big question I see a lot of gym owners ask, and this is going to be a two-parter, maybe even a 2 or 3 or 4-parter. I am the sole proprietor. I own my business. I pay myself, let's say W-2/1099/ what, like some pass-through type income, like an LLC that just pass-throughs to me. Is any of that income available to be used in the payroll calculation for the loan?
My understanding is yes, as long as it's not over 100,000. That's my understanding, and that's another point of contention that we're having to deal with right now. I think that's the number that they're looking at as well, right? And I have to take a look on how they're going to do the disbursements or the. I think that they're fine, right? Because you're a W-2 employee of your own business, that's fine. But if you're, the other technical size of it on how the gym owner per se is designated and how they're getting money out of the business, I need to understand that a little bit more.
Okay.
Writing that down too as well, because that's another question that came up earlier for me.
Yep. And just to clarify for people, I think we've mentioned it earlier, but I want to make sure it's very clear. W-2, like let's say a gym has coaches and they're on W-2, and another gym has coaches and they're on 1099. Both of those count towards the payroll calculation, correct?
That's my understanding.
Yep. Okay. And yeah, if you're just joining us, I just want to make sure it's clear. This bill has just, passed, and there's a lot of weirdness in it, I guess, if you're looking at it from a lender standpoint. So lenders are very cautious about saying exactly what is going to work and what's not going to work, because, for instance, like you never can get a non-collateralized, non-personal guaranteed loan with no recourse before. That's just unheard of. So if you do talk to your lender and they have a lot of trepidation about exactly what this looks like, that's probably why. And they're waiting to see like official guidelines set forth by the government and by the SBA that they can loan against.
Yeah, and just to add on to that as well, right? So I mean, we're at a point now in which this is moving rather quickly. I'm pleasantly surprised to see how quickly this is moving, right? I mean, as of Friday, they were still negotiating, some of the terms, some of the guidelines in there as well. And now, listen, I thought it would be a couple of weeks, and I'm hearing as early as this week, banks, lenders, we're going to get guidelines, specific guidelines from SBA on how it's going to work and how we need to implement it. And all lenders need to follow pretty much the same direction, but there's still going to be an interpretation depending on the lender and the person you're speaking to, right? It's always the same, but the clear guidelines in regards of the personal guarantee, no need for the collateral. The other big thing as well that I understand and I've read is, normally if you apply for a loan, one of the first things that a lender is going to look at is, hey, what other credit do you have out there? What personal credit or business credit do you have out there floating around? And then that's how we will do the formula on like, well, how much of a loan can you really carry? Well, that provision under the PPP is actually now out, because we're not, according to what I'm seeing is, we're not going to look at that, but can a lender interpret it where I still need to look at it? Those are the things that I need to figure out in the next couple of days.
Yep. Okay, cool. Let's see if I can go through any more of these questions. You want to stop your screen share so everyone can see our lovely faces while I keep going through this? And again, if you're just joining us or you're tuning in, feel free to ask any questions you might have. If you're joining late, some of them might have gotten answered already. If it hasn't been answered 2 or 3 times, we will try and get it back in there. In terms of this loan process, how's that looking? I mean, I assume if they're going no personal guarantee, no collateral, no recourse, and for the majority of people who execute this correctly, it might be almost 100% forgiven. I assume this might be very shotgun streamlined. Is that assumption crazy?
Yeah, look, at the end of the day, we're still going to be, lenders are still going to, we're still going to ask for, whatever available information on the financials that are currently available, right? I mean, we've talked about not having, your 2019 taxes, and at least a lot of businesses don't, but they may have some interim financials, right? Your profit and loss, your run, rent roll, whatever it may be. But you should have your, depending on how long you've been in business, you should have your 2018, you should have your 2017, right? I mean, so there's still going to be that process in which we're going to do the best that we can based on the information that's available, but it is a little bit different. What's going to be is, it's that we're still going to put a package together, through an application process. So you're still going to have to be prepared to disclose your financials, just like you would normally with any type of loan. So I think the bank's just going to be more flexible, because we won't we won't require certain things, right? We won't require the personal guarantee. That's a huge thing at the end of the day.
Yep. Yep. So one thing we're recommending, the gyms that we work with, and in our Facebook user group, the Gym Survival Guide, what we're recommending is people kind of put together a package as if they're applying for a normal SBA loan, which is way, I'm guessing is going to be way more stringent in terms of like what you guys are looking at and how the underwriting goes. If you're not sure what that is, or you need kind of like a playbook on how to do that, I'm going to paste a link in this chat here, both here and on Facebook, so that you can register for a playbook that we're hoping to release today, which will kind of give you the ground floor idea of everything you need to get ready so that you can hit the ground running. That actually leads me into my next question that I think is kind of important. This, to me, feels semi like a lifeboat land grab that's being put out there. Do you think these funds can dry up? Do you think there will be a rush for it? I imagine it being like my Trader Joe's, where there's going to be a line out the door and only one person letting people in. Like how behooved are gym owners right now to get all their stuff ready and be one of the first people to apply?
I think that's you hit the nail in the head. I think that's the thing that I'm looking at. As a matter of fact, internally, I'm being asked to put together a list of businesses that are interested in doing this. Because the sooner you can get your stuff together, as you were pointing out, some of those financials and documentation, the better off you're going to have for a lender to pay attention, right? Because if you're a business that, hey, you know what, I just heard about this, but I don't have any of my financials. That's great, but I probably won't, I probably couldn't help you right away, right? Because you don't have your financials versus someone that put their stuff together, they have a packet, they've already had a conversation. I already understand the type of loan you're looking for, what your average cost has been, and how the size of your business at the end of the day. So I think the Trader Joe's, analogy comparison, it's really good, right? I mean, there's look, when the EIDL website out, I mean, the first few days, if any of you guys tried it, it was painful. It was really, really painful. And I'm not suggesting that this is going to be the same. I think that the cool thing about the PPP is the fact that obviously, the country has the infrastructure through banks and through lenders and other folks to actually support the demand. But like anything else, right? There might be a rush to try to grab some of that money, because some folks do need the money, and they're hurting, and especially if it's being made attractive because of the forgiveness portion of it. I think it's important for people to kind of, hey, talk to your accountant, talk to your bookkeeper, see what you got, and have your documents scanned and just be ready. I mean, simple things like that.
Yeah. So to plug it again, we're going to put out a playbook which will have all the typical things you need to apply for an SBA loan. We already kind of went over this with Carlos to make sure it looked good, just to make sure that like when this door opens up, you kind of already have all your documentation ready. And there's a few bonus things in there that I think will make your application look better. So the link, I pasted the link in here, and we'll put it up again in some of these groups. So that actually leads me to my next question. When do you think loans, right now you can't apply for this, right?
Correct.
When do you think this will actually open up?
You're asking me to guess, but I will give you my best guess, right? So, underscore, I'm guessing here. I'm again, I heard that we're going to get guidelines this week. Then, the banks that are like myself, good lenders, will, we're already working on trying to figure out underwriting criteria based on what we're seeing. So I'm believing that by next week, folks should be able to apply. And then I want to see some kind of a timeline on how quickly the money comes, right? Because again, you're still going through an underwriting step, right? We still got to get a packet, and God forbid, your packet's not complete, then the underwriter has to come back. And I mean, I can see it being as quickly as a matter of days if you get a full packet versus a couple of weeks if you're struggling trying to connect with your accountant, right? So I think that the more complete you have, the better it is. But I'm going to guess that folks will be able to start applying by the end of this week, early next week. That's my best guess. Which is a change. If you think about it, it's a change from what we were talking last week.
Yep.
I thought it was going to be I thought we were going to get, guidelines 2 weeks from today. And now I'm hearing, hey, I think guidelines are coming in this week, in the next couple of days. And then we still have to internally put that together with our underwriter team.
Okay. So if you're listening to this now, let's assume what Carlos is saying is right, and let's say by next Monday you can apply, which means you've got a week. And if you want to be like aggressive on this, you have till Thursday or Wednesday to get all your documentation in order. Which means I need to hustle even faster to get this playbook up so that we can make sure we get the information in your hands of everything that you need to be ready to apply before it's time to apply. Hey, I want to clarify one thing because I think I made a mistake on it when I initially interpreted it, and I've gone back and changed it thanks to Joe Sabulski actually tipped me off to it. The calculation for the loan is just 2.5 times your average monthly payroll. Right? From which time frames again?
February of last year to June of last year is what they're looking at.
Okay, so it's not necessarily your recent payroll, but a year ago payroll.
Correct. Now, one of the questions that has come time and time again for me is, well, what happens if my business started, fourth quarter last year? So that they're going to look at the, your payroll and your average rent expense and utilities for, for this year, right? January and February of this year, I believe. I think that's the way they're working.
Okay. Yeah. So I want to make sure that's clear because in an early post that I wrote, I interpreted it as 2.5 times your rent, your utilities, and your payroll for an entire year, which is drastically different than 2.5 times your payroll of your average month from a certain time frame. Yeah. But I do want to say that actually makes this loan more attractive to me because it's going to limit how much you can take to almost exactly the same as of the amount that you can write off, right? Or you can you can get forgiven. So if you do everything correctly, there's a very high likelihood that this will become a grant, meaning the government will forgive almost the entire amount, if not all of the entire amount of your loan. Right?
Big percentage of it, for sure.
Yep. So that's why, to me, this is a very important movement for gym owners to get on because it's something you qualify for. And what this is signaling to us here at Push Press is the government expects this shutdown to last 2.5 months. That's basically what it's signaling. So if you don't take this, then hopefully you have 2.5 months worth of money that you have free and clear that you're willing to spend, and you don't want to take the government's money to do it. Another thing to be very clear about is the government's purpose for doing this is to retain people on payroll, right? And to make sure businesses don't go out of business. So this isn't just a free handout for you to go take a trip to Mexico on. You have to, or you can't take a trip anywhere now anyways. But the point is, this money is specifically to keep the economy afloat in very specific ways, which is keeping your employees on staff, not cutting their pay or the amounts of money they make, making sure you make your rent, lease, or mortgage payments, and you're not shutting off utilities, right? Okay, we got a couple questions here from Brian. I believe this is Brian Buell. I don't know how to say his last name. Buell. It's regarding the $100,000 salary limit. Does this amount refer to the equation for determining how much I can qualify for, or does it refer to who I am allowed to pay out with the loan? I think it has to do with the qualification. So for the $100,000, this is a question. If someone makes over $100,000, they are just disqualified from the payroll calculation, correct? Not the portion above $100,000.
That's my understanding too, as well. But again, I need to see that because to me, it would make more sense the other way, right?
The amount over makes more sense.
Right, the amount over. Like, hey, look, I make 150,000, so can I blend in $99,000? Right. So that's a good question. I don't know the answer to that 100%.
Yeah, that's got to be something that hopefully gets clarified because
again, part of that guideline too, right? It's in the provision there saying, hey, if it's more than 100,000, then but I can't really tell right now how they're going to calculate the formula. So more to come on that.
Yeah. I mean, if their goal is to help the economy, it also seems like if you don't protect people who are high wage earners, you're kind of destroying the economy because they probably spend a decent amount of money, right? Okay. So for Debbie, she asks, is this payrolls or is it rent, utilities also? So there's two ends of it, Debbie. We're going to clarify. The amount of loan you can get is calculated only on your average payroll from, let's just say a year ago, basically. The amount, what you can spend it on is, and get loan forgiveness is your payroll, rent, and utilities. Again, according to the guidelines as they're understood today, right? When these loans actually hit the desks of Carlos and other lenders, it will become 100% clear. But the way it looks like it's written today, you can use that money and have it forgiven if you spend it on rent, mortgage, utilities, payroll, and I think that includes like health benefits and taxes and stuff like that, right? Payroll
Correct.
taxes.
Vacation, sick pay, all your insurance premiums for your employees.
Yep. Okay, cool. Let's see what other questions we got here. Brian, I think this is Brian again, same Brian. What if someone leaves voluntarily without me laying them off? Would that disqualify me from having that loan portion forgiven?
The way I'm understanding though, right, if that person left, again, because it's going to be that average cost, from a year ago. And, the way I'm interpreting it is that, yes, there's going to be that step in which you can get the loan, right? You can get, 40,000, 50,000, 60,000. But then when you're coming back to applying for it, if that person is no longer there, then you don't have all that documentation. So then that portion of it may not be something that might be forgiven. So you can use the portion, you can use the calculation from last year, when they're doing the comparison year over year, month over month, right? But the forgiveness portion of it, if you don't have the documentation, how do you go to the lender, myself, and say, hey, by the way, I need you to forgive this portion of it, but the person's not there, even if they left voluntarily, right?
So don't let people quit.
That's part of something something that you're just gonna have to carry the loan going forward. Or right, if you didn't use it because the person wasn't there, then you pay it back, right?
Or hire someone else, Brian. You can always hire someone else.
Sure.
Right. Or you can hire me. I'll take the money.
Payroll.
All right, let's see. I lost my Q&A screen. There's some other good ones here. Where did it go? It's over here. So that one's answered. And that one's answered. I saw one on Facebook. I'm trying to find it. Oh, that's right. I remember which one it is. What would you, we had this discussion between us when we talked before this. If I have a relationship with like, I'm going to put air quotes relationship with like B of A or Wells Fargo, because there's probably just some like, in-office person there that whoever is there at the day that I get, versus talking to someone who's more of a regional or local SBA approved lender. What are the differences in the service? What are the differences in like, because I think a lot of people are just going to go like, okay, I'm just going to Wells Fargo and get this loan now, versus someone like you who's the two different companies, right?
Sure. No, I mean, that's a fundamental question, right? I mean, for me, like I mentioned, I've worked at a large institution in the past, right, for many years, right? And the one thing that's a little challenging when this times come about is like, can you get a hold of someone, right? I mean, how many times have you applied for a mortgage or a loan, and the person that's kind of selling you the loan, the idea of the loan, it's the person that like it's there for you every step of the way until you apply, and then after you apply, you never hear back from them. I think that's the big difference, right? I mean, for a regional, for someone like me, the way I like to do business is like, hey, listen, you have a better chance to get that loan, or at least have a better experience going through it. And maybe its speed sometimes is really a key factor when it comes to the need, right? And I get someone, or a regional smaller bank is able to kind of call you back, give you a status, kind of walk you through it. I think that's the biggest advantage you have, because you're right. I mean, just the size of an institution, sure, they may have more employees, but at the same time, the volume or the request may be higher. So my biggest thing is just, make sure that you have a, personal connection with whoever's doing it, and ask them. So what happens after I apply? What happens then? Is it just go to an underwriting and they give you an 800 number, and then you got to be dialing in, and, like what's going on? You don't hear back from them. So I think that's the biggest difference. And believe me, I'm not perfect either. I maybe a time in which is like, hey, you know what? I can't get back to you, within the next couple hours, but I certainly, I treat every client with respect, and I understand how it is, because I've been on the other side when I've been applying for a mortgage loan and I don't hear from that big bank, and it's like, oh my gosh, what do I do now? I just gotta wait it out. So I think that's the biggest thing. Make sure you have a direct connection with that banker.
Yep. I will say this. So like, let's use kind of the analogy of, I don't know, a 7-Eleven versus a Whole Foods. The bigger banks will have more people and have more resources, but like to get something from the person you're applying to underwriting, there probably will be no personal connection between those people. The underwriting is kind of where the backlog kind of will sit, right? And so you're going to have more of on the pro end of it, you're going to have a bigger institution. You're going to have like probably more access to in-person meetings or whatever. But when it comes to actually like getting the thing done, you're probably more of a transaction to them. You're probably like a stack on a file cabinet with, 500 different loan people's stuff are going to the same underwriting team. And it's just, you're just a number there. Smaller company, it's going to be smaller. You're probably going to get a little bit more boutique feeling from it. And then they might have direct access to their underwriters, which might be able to streamline stuff. Pros and cons to both. As far as like me, I would prefer to go to be early in on the thing about the smaller guys, they're going to get queued up faster, right? So if 100 of you guys now turn around and send Carlos your application, it's going to be his team with 100 applications versus like B of A with 100 applications, right? It'll be a little more backlog. So if it was me, I'd try and find a Carlos in my region who can help me and be communicating with them now. Like, I want to get in on this. What do you need? Let me get all my stuff together and try and be at the front of the line for that. Cause you're going to be serviced really quick. That's how I think it'll happen. I can't guarantee that, obviously. Okay. I had another question here. So from Tanya via Facebook, we're switching to Zoom classes, which will allow our payroll to be reduced by almost half. Will that payroll still be forgiven? The answer would be yes, right? Like you can still get forgiven any pay, but you're going to take a reduction if you're reducing your payroll by that half.
Are you reducing payroll because you're laying off people because you don't need as many people? Is that the question?
Yeah.
I think the way I'm reading, the bill, it says that if you reduce it by more than 25%, then yeah, you can still get the loan, but you're not gonna get that portion, back.
Yep.
Or you're not.
So
Yeah.
yeah. So Tanya, what you want to do is either hire people to do stuff. Like here's what we're looking at. We're looking at a phase where, let's say you do cut all your expenses by half because you're doing Zoom now. You can hire people to help you get stuff ready for when we're turning out of this economy, or you can spool up other service lines, or you can hire people just to give them a job because you're going to have the ability to get a forgiveness on this for a few months. Now, I say that you have to be cautious because you have to keep all your documentation in order, because if you hire somebody just to give them a job and they're not really doing much, and then you don't have documentation for it, you're going to end up being on the hook for that loan. So, make sure you're careful. But I'm sure you can get creative and think of ways you can hire people to help you grow your business now today, or at least in the future with this, right? And again, that's what the government wants. They want to make sure people have jobs. So that's the point of this program. Okay. Let's see what else. So Benjamin Owens, and are there limitations to payroll costs? Meaning if I hired a new people recently, will their payroll not being included in the last year's number calculating? Okay. So basically the question is, last year I wasn't as big as I am today, right? This would be PushPress's case, right? So last year my payroll is not anywhere close to what my payroll is today because I've grown. How does that factor into the equation of stuff?
So again, two components, right? The way that you're gonna get the loan is based on the historical history that you can prove from last year. And then what's going to be forgiven, obviously, it's the documentation that you keep going forward. So, so for example, for you, then
we would just qualify for less loan, and we would just get it all forgiven, basically.
That it sounds like that would be the way, because obviously your need right now, when you're burned through the cash that you're going to go right now, it's going to be higher than what it was last year.
It just wouldn't last us 2.5 months. It would last us like 1 month.
Correct.
Yeah.
Correct.
So a short amount of time. That kind of sucks on one hand. Okay, cool. Hey, if you guys are just tuning in, make sure you use the Q&A if you have any questions. I'm kind of trying to plow through them all. Brian wins the award for the most questions asked. Any tips on how to find an SBA lender locally? Does Carlos do lending across the country? I'm answering that for you. No, I don't think you do.
I don't. Unfortunately, we do not. We, regional player out here. So, however, I've offered this because I've connected with these guys here in a really good way. Shoot me a note, or shoot me or shoot them a note, however you want to handle that. And I know folks all across, that's for sure. So I can help you find a local SBA group, or at least guide you to the calendar where you can do some research behind that, for sure.
Yeah, if there was some resource that people could start to look up regional SBA approved lenders, there's got to be something out there. I haven't looked it up.
I'm gonna send you a couple of links here after the call, and
okay.
maybe you can distribute that as well.
That will
your local SBA. It's probably the best place you want to start.
Yeah. And what we'll do is we'll include it in the CARES Act SBA loan playbook that we're building. So to plug that one more time, we're building kind of a playbook to kind of give you all the information you need. I mean, to be honest, a lot of it's kind of out there and a lot of it has been discussed here, but we're just going to put it in one concise packet so that you don't have to kind of like dig all over the place, just make it easier. I see this question being asked a few times in the Facebook group, and I want to address it again. We've already addressed it earlier, but I want to address it again because it's important. Owners' payroll, if you're W-2, do count against the payroll for the forgiveness, correct? As long as you were making that previously. You're not giving yourself some huge raise all of a sudden.
Correct. And there's guidelines on that as well. You can't go about the 100,000, can't, all of a sudden, go from making 25,000 to 90,000 either, right? I mean, there's going to be a percentage, there's going to be a range of what that could look like for the for the grant option behind that, right? Not for the average of what you're going to get or what you qualify for, but for what you're going to have to reapply in a management. I don't want to use the word reapply because that's not true. You just apply for a portion or all of the money to be, forgiven at the end.
Okay. And then Laura just asked on Facebook, and I'm going to clarify this again, and partially because I feel like I screwed this up earlier in a post. The loan amount you can get, the qualification for the loan amount is 2.5 times average monthly payroll, not annual. So again, and I think this is a very important concept for everyone here to understand. They're going to give you, let's say your average monthly payroll is $10,000. You're going to qualify for up to $25,000, and hopefully everyone can get close to that amount of money. And if everything's the same, you're going to spend about that much money in 2 months between payroll and rent, if not more, right? So as long as you document everything, 100% of this loan should become forgiven, which means you won't have to repay it. And anything you do have to repay, you're going to get a 6-month minimum deferment in payment. So you won't have to start paying it probably until the end of until early 2021 or late 2020, depending on the timing of this. Okay. So that is an important distinguishment to make because I screwed that up in one of the first posts I made. I said it was over the annual, which it is not. I was hopeful. But the good news to that is, because the one worry I had about that is you're going to have a bunch of gym owners who take a $200,000 loan when they don't need it, and they end up with all these payments that they don't need to have later. This is even better because it's going to get you through this time, and you're hopefully not going to owe anything at the end, right? If you do everything correctly.
I think that's a really good way of putting it. I mean, I think that, look, this is a tremendous opportunity for folks, business owners to really kind of consider this, right? I mean, yeah, there's going to be, look, every loan, every person is going to be a little bit different, right? Every situation is different, but at the end of the day, the principles remain the same, right? What did you spend before? What do you need now? Some of it's going to be different because maybe you left someone go or someone left voluntarily, whatever the case may be. But at the end of the day, look, I mean, this is a great opportunity to kind of, keep some kind of a fiscal responsibility too, so you don't get saddled with a bunch of money that later on, it's like, oh man, you know what, I got 200,000, I only needed 50, but I used something else, or I did this, or I mean, that's not really the intention of this. This is to try to maintain, your business going and get you through this kind of, really rough, patch here. And at the same time, do the right thing by trying to maintain some of those loyal employees that you may have too, right? Which is the saddest thing that we've seen over the last couple of weeks, right? Over 3 million, folks filed for unemployment, the last couple of weeks. This is really a tremendous incentive to keep everyone, afloat.
Yep. John Bosma, what's up, John? Local guy here from Torrance. Ask your EIDL question while I move on to Brandon Booth's question. If we're able to, should we pay employees what they would have worked, front desk, childcare, et cetera, or what they would have normally on average, personal trainer, have earned, and ask forgiveness on that? Or if we aren't paying them now due to forced closure, what will the effect? Will that affect what we would get compensated for? So same kind of question. Like, once you get this loan, you probably want to hire people back if you have a job for them, or at least hire people that you can find a job for, because that's the purpose of the loan and that's what the forgiveness is for. I mean, unless, and you have to do the math here, your rent is so high that you can use the payroll amount from last year times 2.5 to basically pay for all of your rent, mortgage, or whatever lease right now. That being said, like ideally, let's be good people and hire people back and give them jobs, especially if you had to let them go. But you have to make that decision for yourself. Would you agree, Carlos?
Yeah, no, I think that, look, I mean, if you cannot keep the doors open, right, I mean, then you can't hire anyone either, right? So, as a business owner, I'm sure, when I talk to them, half of the time it's like, how do I keep the doors open? How do I keep things going, right? I mean, I think that every situation, as I mentioned, the principles may be the same, but at the end of the day, you got to do what's best for the business. And if you can explain it later, I mean, look, and at the end of the day too, if you think about it though, you do get the loan, you maintain the doors open, right? You may not be able to hire someone back, or you had to lay some folks off, or what have you, the case may be, but you are able to maintain the business, and it goes on, and maybe at the end of the year you're able to hire them back. But that's a decision that every business owner is going to have to do, right? I mean, what do I do long term? Some folks, when I'm speaking to them right now, because I'm talking to them daily, really, they're in better positions than others, right? Depending on what their cash flow was, what how long they've been in business, what they were doing, and some folks are okay, and they're still going to go ahead and apply, and just kind of make sure that, because by the way, let's not forget that we don't know how long this thing is going to go on, right? I mean, that's still the kind of big unknown, right? I mean, I was reading something this morning. It's like, hey, is there going to be another stimulus? If this thing goes on for another 3 months, and the answer to that is I don't think anyone can really tell you that right now, right? I'm looking at it for like, what are we going to do in April? How are we going to support our business clients? What can we really make an impact of it? How, because there is a lot of pain for some of those folks that are scared, or they lost their job, or maybe they can keep it going for a couple months, but what happens month 5 and 6, right? So again, every business owner is going to have to make that decision. And worst case scenario with this particular program, so a portion of it gets forgiven, but maybe a portion of it doesn't, and then you have a deferment, and then you have to figure it out. But at least your business continues to be, right. That's the bit. But again, that's a very personal question for each individual to kind of figure out on their own.
Yeah, and I actually want to clarify something I made. This is so hard not to make mistakes in speaking. Someone asked earlier about the Zoom call cutting my people in half, and then and I said you can use it to pay your rent. You can't, because your payroll cannot cut by more than 25%. So you need to actually hire someone back, or you're going to take a reduction in the amount of forgiveness that you can get. So no, you cannot just use this to pay your rent or lease. Thank you, Joe, again for correcting me. Joe is like a resident expert here. I think his sister works somewhere in this industry, and she's really been read up on it. Okay, cool. CrossFit Huto asks, what are the financial implications of maintaining full-time employees in regards to the SBA loan? I'm not sure exactly what that means. If you can kind of clarify that a little bit better, we'll get back to that one. In the meantime, John Bosma here asks, I've completed all the forms for the EIDL. Normally there's a form space where you can indicate how much you'd like to borrow. I don't see that with any of the EIDL forms. Am I missing something? Is that the case?
Yeah, from what I can tell, for some of the clients that I've known that they've gone through that, obviously they go through the process, and then they get assigned from someone. Now, at the very beginning, folks were kind of guessing about what they needed, based on like, hey, I'm going to keep someone going for a month or two. But normally, whoever was handling the request, through the EIDL, will come back and try to work that out. Like, how much do you really need? Because every business size might differ as well, right? Some folks may need 20,000, some folks may need 60,000. So, but I understood that they were doing that on an individual basis. But there was a portion in there in which you could actually plug in, this is what I think I need. So okay. I don't know if I answered that, but that's obviously on the other side.
I would, hey John, I would talk to your lender about that, and just that's probably something they would know specifically. See a couple questions here in the chat that I have not been too many things to pay attention to. CrossFit Nevo, you cannot apply for this loan yet, but Carlos is expecting, hopefully, kind of by the speed at which I guess information's been being released by this Friday, maybe early next week.
I'm thinking
it's a guess.
Next week.
Okay.
It's a complete guess.
Well, on my end, I would like owners to be ready earlier. But yeah, let's just say sometime in the next 10 days, 10 business days, it might be ready.
Yeah. I'm
I'm
sure you
still,
guys will keep up to it on that as well. And as soon as, as soon as I hear that, I can give you guidelines of what we're doing, right? Not everyone else, but I'll let you know what,
yeah,
how quickly we're anticipating. As I mentioned, what we're doing right now, to your point, is we're just forming those lists that are interested in doing it and trying to help them now navigate through like what the needs list is going to be.
yep.
That's a good reason why to go back and just start getting ready for that.
Yeah, yeah, absolutely. So what we're doing here at PushPress is we're keeping in touch with people like Carlos so we can get information from actual lenders so we can know kind of from the ground what's looking to be happening. Christina Marie, does it matter if the employees were part-time or full-time? Does not matter as long as you were paying them either W-2 or 1099. And you were doing that from February to June of last year, 2019, right? That's the window.
Sure. That doesn't necessarily need to be the same employee. It's just the cost, right?
The average cost, yeah. Dustin, what's up, Dustin? Are there any relief on is there any relief on payroll taxes? And that's included, well, so payroll taxes is another part of this CARES Act that we aren't going over really today, right? There is.
Yes. That is part of it on that as well. Yes.
Yep. So I would recommend, Dustin, talk to an accountant. I know you have an accountant, but if you don't, find one, especially this year. I'm recommending everyone this year definitely have an accountant because there's so many tax law changes with your business that are coming up that you're going to want to have someone making sure that you're participating in all these benefits that you can. Okay, let me see if there's any more questions here. I didn't look through the chat, so let me see. Thank you. How do we reach Carlos? I live in San Diego.
Yeah, I got someone local as well. I don't know if you want to just. I don't mind disseminating my contact info, my email. I welcome all questions. I mean, you know me. Sometimes it's just a fury of answers as I get to them. But I have folks out in San Diego too as well that can help locally. So that's for sure.
So Joshua, we're connected on Facebook. Just reach out to me and I'll put you in contact with Carlos. And you can speak to him. Jesse in the chat says, for the EIDL loan, the term substantial economic injury is used to describe those that qualify. That is not my situation now, but don't know what's coming. Would it hurt to apply now before it really affects my business? So basically I'm not waiting until it does affect my business.
Look, I as I was sharing earlier, right? Every business that I speak to, there's some folks that are doing, actually it's kind of booming for them, right? I got a couple medical suppliers that, they're doing incredible, right? I mean, it's a good time for them, right? And then I got some other folks that it's in the restaurant business. It's like, my God, they can't keep the doors open, literally. I would just tell you this, as an overview, I would just get ready. I would get ready. I would, and at the end of the day, look, if you don't need it and you don't want it, then you can make that choice. But I would get ready today. I get ready tomorrow, as it's being suggested, and just, then it's your choice to, really, do I really want to get the money or not? And if you get it, by the way, here's the thing that I don't want to advocate this because I don't think it's a best practice. Again, right? Every business is going to be different with their cash flow and their need. But if you do get it, right, and then you don't need it, there's no prepayment penalty for it. So would it cost you a little bit, perhaps time, and maybe you got to pay your accountant and what have you? But normally you're going to get a 5, 4, 3% every year, dwindling down backwards, right, to pay the loan. So this one, some folks, I think that's why they got, they did away with the prepayment, because there's some folks that don't know, right? And as I was sharing earlier, I really can't tell you. I don't think anyone can really tell you how long this is going to go on, right? I just want to get through April and figure it out from there.
Right. So the only risk I see in taking the CARES Act loan without applying for an EIDL is if this goes out for 9 months. I mean, they're going to have to come up with some other package for people who have exhausted their. What's that?
You would imagine, yes. I would agree that they would need to. But again, I'd rather get ready now, see what's available now. And I mean, that's a sizable amount, $350 million just for this. And a big portion of it is going to be forgiven. That's unprecedented, and this is kind of a little bit of a test case too as well. How does it work? What happens on the next one? Do they follow suit with this, or do the rules change a little bit? So I would just get ready and then just kind of, figure out long-term, forecasting on what the business needs at the end of the day.
Right. Here's actually a good question from John Bosma again regarding EIDLs. It says the website's set up for people to submit all their forms online. Is it better? Is there any pro or con versus submitting it online versus going through a lender?
Well, my understanding was that the EIDL, you needed to actually go through the actual website, right? Through the website that they set up. The EIDL, I don't think that, financial institutions were actually doing those loans directly. So that's why the PPP, that's the demand was so huge, right? So versus now that this is, they're going to use the entire, financial infrastructure out there, anyone that's SBA preferred.
Right. That makes sense. Okay. And then for Christina Marie and anyone else who's asking, and this is a very popular question, if I open my business after like June 2019, you do still qualify as long as you open before, what was it? February 15th?
Correct.
Of this year.
Yes.
So you had to be in business before February 15th of 2020. If you opened after June, which is kind of the cutoff for their salary requirement, they take a sliver from somewhere else. Was it like in January 2019 or something?
I think that's exactly right. They're going to look
2020,
at
sorry, January 2020.
This year, right?
Yeah.
They're going to look at the snapshot of now, but again, right? I mean, it's going to be an average of that at the same time. The cost may be or may not be similar to what it would have been from since the business began.
Yep. So Todd just asked that as well. So same thing. Talk to your lender. Definitely, this is something you'll probably want to have a lender you're dealing with. That's someone that you can talk to, because these types of questions are gonna be all over the place, and you're gonna want to streamline this whole application and get all this stuff buttoned up ahead of time. Yeah. So Todd, that specifically will apply to you as long as you did payroll in January. What did you? Oh, were you paying yourself, or were you just not paying anybody from July till January? But anyway, talk to your lender. Yeah. And see what you can do. You might only get a portion of what was in January. It just depends on the timing of it and all that. Okay. All right, guys, we're running pretty late. If no one, I'm going to give you guys a minute or two to ask any follow-up questions before we let Carlos go. He is so generous to give us his time. He is not doing loans while he's here talking to us. So I'll give you guys a few more minutes. Hopefully you guys enjoyed this. We will put a replay of this up online, and we will probably, I don't know if I'm going to put Carlos's contact directly to that because he's probably going to get overwhelmed with all you guys, but we'll figure out a way to connect those who live in California. Is it California or Southern California specifically?
Southern California for us.
Okay. So SoCal, which is what, like Santa Barbara down?
Yeah, really.
Okay.
That's exactly right.
All right. So if any of you guys live Santa Barbara South and you want to connect with Carlos, you can get in line behind me. Push Press is going to be first in line, right, Carlos?
Absolutely, on that as well. Just just gotta sign in the dotted line, right?
Tommy, I'll put a link up. Actually, I'm going to put a link here for you, Tommy, who just asked where he can get a list of these things. We're just register for that sometime today. I'm going to have this finished. And we're going to have kind of like your complete list of everything you need to get ready. And kind of it's going to be looked over by people like Carlos to make sure we're on point. All righty, guys, that'll be it for the day. Go get your shit together, taxes, financials, all that kind of stuff. And yep, Tommy, owner salaries can be included in the loan and forgiven, just as long as you're actually on payroll. Okay. You can't just be like taking money under the table. All right, cool. All right, guys, we're going to end this now. We're going to let Carlos get back to work, and I'm going to get back to work on that playbook. See you guys.
Thanks.